Good morning, everyone, and welcome to the morning homework session and trade plan setup for Wednesday, February the 5th, 2014. I want to welcome all our guests from Twitter, and if you're watching this on YouTube, we are Quantum Leap. We are a self-organized learning environment, or what we call a SOL. We run a private Skype room that has been around for over 4 years now. If you're interested in coming and checking it out, we talk about the market in the Skype room, share trading ideas, and then each morning we get together and do this live session to do our homework, set up our trade levels, and prepare for the daily RTH trading session. If you would like to come and check our room out, you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Also run a live chat room where we do live trading during the day as well. If you're interested in that, you can come and have a discussion with me. Before we do anything, we need to get the legals out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Any trades you see are for education purposes only, and past performance is not indicative of future results. Well, Howard's just got into the room, so I don't have the actual homework sheet open yet. I do have the QL2P. We have a bigger homework sheet that Howard and I use, but the end result is this ladder above the previous day close and ladder below the previous day close. Basically, and what it does is it shows all the different levels from the different methodologies that we talk about and track. Those includes everything from volume profile to Fibonacci to moving averages to support and resistance levels, pivots, Elliott wave, and then we put them into a ladder. This is not to show you where to trade. This is to show you where other traders may find value and take a position. Also has the news for the day, so let's just take a look at that. We had ADP non-farm employment change and Canadian building permits gave the market a little bit of a spark, got a little bit of a pop-up. We also had the Canadian building permits. We have ISM non-manufacturing PMI coming up at 9, so be careful. This usually sparks the market somewhat, as well as we've got crude at 9:30, and then we've got FOMC closer speaking at 11:30. All times in here are in Central Time, so just be careful on the first half hour. Oh, Howard just posted the homework sheet, so I'm just going to open it up now. Sorry about the delay. I do want to take a look at a couple of these numbers here. And what we do with the homework sheet is we take a look at the macro to the micro within the terms of the key numbers and different levels that we're looking for. And I think it's kind of interesting. I wanted to take a quick look at the COT report. Well, that's loading. I'm just going to jump over, just take a quick look at where we are in the trend macro to micro. Of course, on the monthly, we're coming down to close that tech gap that we had on the monthly and test the 9 EMA down at 1716 area. But we still have slope. We've lost a little bit of it here. We do have separation. Until we get below this 9 EMA, the trend is still very much intact on the monthly. On the weekly, well, we talked about the weakness coming in. We came down last week and tested the 20 SMA and didn't break below, but now we have broken below and we're seeing some further weakness. So the trend is starting to get violated on the weekly. On the daily, well, we created this technical gap that I was talking about yesterday. We had an inside day. The main hypothesis is that we were going to chop around in that distribution zone that has a lot of undetermined fair value. We'll take a look at that on the composite, but that's exactly what happened. And so far today, we're still trading inside. But we do have this technical gap against the 9 EMA. Technical gaps are closed through time by going sideways or through price by coming back up to close the gap by testing the 9 EMA again. This is a good example of a tech gap that was closed through a combination of both time and price. You can see we came down and then we rotated back up, closed the gap, rejected off the 9 EMA, and then continued moving down. Now we've created another one. So I'm anticipating sideways consolidation with a slight move up to close the gap on the daily. On the geometric chart, we had talked earlier this week about breaking out of the lower line of the upward sloping fork and testing the center line and breaking below and trying to hold the center line of the opposing downward sloping fork. And we said if we couldn't hold and get back inside of the larger upward sloping fork, we're likely to come down and test that lower line of the downward sloping fork. We've come down. We didn't quite get there. We're consolidating. A test of that lower line today would bring us down to 1727.50, which is a naked VPOC that we've got just below us. So that's well within possibility today. A test to come up and test the center line with a bounce off the lower line would bring us up into that 1777.75 area. So I've got the homework sheet downloaded now, so let's just let me open it up. This is the homework sheet that Howard and I have been keeping for a few years now. It's got over probably 600 days of data in it. And what we do is we just look at the key levels from the macro. Of course, the key number above us, which is fairly a ways away now, is the year open at 1837.75, and we clearly have so far this year struggled to get above the 37, and we have a bearish year going on. Our month low is down here at that 1732.25. That's going to be a key area to watch for, and of course we've already violated the previous month low from December at 1754. Nothing else really pops out. Let's take a look at the intraday. Again, we had lower numbers yesterday. We opened the Globex going into yesterday at 1738.25, had a high at 46, a low at 34, and we opened the RTH in range, in value at 1744.75, and we were anticipating a rotational day inside that distribution. We ended up with a normal variation with a 3-point opening swing and a 9.5-point initial balance. All our intraday numbers were slightly higher, except for the high. We put in another lower high for the third day in a row. So this is just indicative of a consolidation day. Ranges continue to expand again. You can see that all three, the RTH, the full session, and the Globex, the ranges are expanding out. And this is indicative as well as a move off of the all-time highs. As the bears and the bulls fight it out, they stretch and extend the range out. We had a lower value area high, but a higher value area low. Again, very much like an inside day, but we still have this weakness. And yesterday, once again, we broke the IB outside of the pocket, and actually outside of the normal, the secondary pocket, and we're getting these late IB breaks lately. As they fight it out and determine who's going to be in control, early on in the RTH session, they're battling it out, and therefore we're getting a little bit of a later break for our IB initial balance break study. Let's go over to the daily report. I just want to quickly put in our highs and lows in terms of the ATR targets. Our low is 1734. I'm sorry, what is it, 1734 and a quarter. Sorry about the delay. And so far our high is 1746. So our current ATR, 20-day ATR targets for the full session, the ATR target to the upside, 1756 and a quarter, which is right around that 55.75, which is the 50% retracement of the significant breakout candle from the other day. And then our low is down at 1724, and that's just above that 2350 that we have as the key line in the sand. Just want to take a look at the COT report and just point something out. As you can see that we track the large specs, the small specs, and the commercials, and this line right here is your center line, which represents net positive or net negative, and you can see that both the large spec and the commercial paper are now below and net short, while the retailers are net positive. And this is usually a possible clue that we're seeing a bit of a topping pattern because of the fact that the larger specs and the commercials are already net short and leaving the bag holders and the retailers chasing that high. So just doesn't mean that the top is in. It's just it's one of the clues that we look for as possibility. So let's take a look at the short-term trends just going into the market. See where we are within the intraday trends. Going into the RTH session, you see we've got good slope and separation to the downside. We had that technical gap that we talked about. We went and closed that technical gap, and we've rejected the 9 EMA, and we've got price paralleling the 9 fairly nicely, and we've got slope and separation. So we're coming into the market on the 4-hour with a bit of a downward trend. But on the 30-minute, where we were trading below the 9 and the 20, we just had the news that popped us up above the 9 and the 20, and we're basically in a consolidation going sideways. So there is no real trend on the 30-minute. On the 5-minute, we'll obviously show that the trend has been reversed. We've closed above the 9 and the 20. We do have a naked cross right here that you're going to want to pay attention to. This is at 1738.75 on the 5-minute. Likely possibility to come and take this out, especially because we've created a bit of a tech gap on the 5-minute. So kind of a mixed bag coming into the market, but off the news it's a little bit more positive. Let's take a look at where we are in the big picture on the composite. We talked about coming down and testing this key level below at the microcomposite VPOC that was naked down here at 32.50. We came down and one-ticked it on that big move down, and then we talked about the fact that this area, that this distribution area that we're in, has a lot of undetermined fair value. What I mean by that is there's a lot of peaks and valleys. They have not clearly defined or matured the auction where they've accepted value at one particular spot. We have all these areas that have some price acceptance. You've got 61 and a quarter, you've got 58 and a quarter, you've got 55 and a quarter, you've got 52 and a quarter. This current 2-day microcomposite VPOC at 50.50, 48.75, 42, 43 area, this 39, and then the 32.75. So yesterday we talked about the fact that last time we were in this area, you can see all the wicks and tails. This was a very choppy area, and my anticipation and my hypothesis was once we got back into this distribution area that we'd see a lot of choppiness. In fact, it was terrible trading yesterday. I didn't even want to trade because I didn't like this area at all. I did take, we took 3 trades, and then I ended up scratching for the day. I got down 4 points, and then I made 4 points back, and then I just gave up, and then I I lost all internet all afternoon, so I wasn't able to trade after that. But I was kind of happy that I lost my power because I didn't need to try to force a trade. So here's what we're looking at. We're still in this distribution area. We still have a bit of a technical gap to close on the daily. So I'm anticipating a continuation of chop within in this area. And we really have to rely more on the intraday information versus the the macro on the composite and the intermediate on the micro composites, because it's going to be choppy in this area. So the defining lines for me are going to be this 2350. Okay, just below that 2350 we have that 22 1/4 gap fill and naked close down here. So this is going to be a key level below us. To the upside, we have that 64, and I mean, you know how I felt about 64 when we were above it. If we broke below it, "sell till your fingers bleed" is the expression I think I used, because we'd likely come down to 52, if not all the way down to 32 1/4. So there's not a lot to lean against down here. You can take a look at this 46, 45, 75 level again, but I think we really need to take a look at the intraday. But the 45, 46 area is just below that 46.75 value area low from the micro composite in this area. So if we get back above that level, then we're likely to see rotation up through to the 50-50 area and the 52.25, which is the most accepted area, and chop around in this middle distribution with a push through to the other side of balance up towards that 61 1/4. The 61.50 was the micro composite VPOC just before they blasted out of this distribution zone. It's also just above the 61, which is the value area high. So 46 to me is about the only thing in this area that you can really lean against. But you can see from yesterday, and let's just take a look at our yesterday profile, is that we chopped around that 46 as the buyers and the sellers thought. You can see they struggled to get above it in the morning, and then when they got above it in the afternoon and went and hit that 52 1/4, they tried to hold above it the rest of the day, and then going down into the close we had that sell-off. Of course, I didn't see all of this. I actually closed my trade long right here when the market gave me the opportunity to get back to a scratch. So I didn't get to trade any of the rest of it. Now, this is a clear indication of where long-term price rejection turns into short-term price acceptance, because of the fact that the buyers and sellers are battling that area, and that's why you can see that we ended up with a VPOC at that 46 level at 46.50. So let's take a look at what we've got. We've got a nice distribution curve here as they fought around that level. Overnight, we've got the low down at 34 1/4. Come on. And then overnight, our high is 46. And you can see that we've got that 46.50 naked VPOC just above us. We're trading right now on the lower side, the LVN of the distribution around that 46. So for me, if we can get above this 42 area, then we're likely to get a move up to test the value area low at 35 1/4. We've got a gap close at 44, and then a push through into this 46 level, and then see if we find responsive sellers stepping in here to hold us still below that 46, or whether or not they'll allow us to rotate back up through up to the value area high at 51.25 and into that balance area between 50 and 52 and a quarter. So let me get rid of this. So there's really not much you can lean against up here once we get into this 50 area. There is this 49.50, but I don't think it's going to be very definitive. But I will use that as an area to trade from, and simply using it to looking for sellers to step in front of that, with the target being up here at the value area high, and then a push through, of course, to that 52 and a quarter, and a test of the range high up here at 53.75. And I'll use that 53.75 as a target area above. And then above that, the target above is going to be that 61 and a quarter again, because that was the last most accepted price before they blasted out of this distribution zone, as ugly as it is. So that will be my secondary target above. And then the other side of balance and the key line in the sand above us is going to be that 64 and a quarter. So that will be a trade area up there at 64 and a quarter. And then once we get above 64 and a quarter, everything shifts back up towards a rotation towards that 81.50 area again. I'm not anticipating that coming into play. The first target above is the range high and the naked VPOC up here at 1779.50, and that will be my extended target. I'm running late, so I'll go ahead and write the extended target. Come on. Write the extended target in before I post the charts. Below 42, then you've got to look for them coming down and testing the range low down here at 38.75. So that will be a trade area and a target below, and then a breakout of that will bring us down to our initial target, which will be the naked VPOC at 36.75. With the secondary target being the overnight low, but not so much the overnight low. I think will come down and take out the overnight low, but this gap fill at 17.33, and that will be our secondary target. And then extended target is all the way down here at 27.75, with the big line in the sand still going to be right here, and our extended target below down at that 23.50, 22 and a quarter area. So that will be a trade area as well as our extended target. I'll just what I'll do is I'll move this to the 23.50, and then I'll put the extended target right at the 22 and a quarter. And then anything below that will take us down to our secondary extended, which will be down there at that 16. Below there, we've got two key levels, 16 and a quarter, 11.50, and then the primary major target, the next area where if we get below that 23, they're likely to come down to find buyers with conviction is down here at that 17.06.50. So that will be a big move down, and we've got a test of 1700 coming if we get down that low. Just take a quick look at where we are on the Keltner. We are trading near the upper Keltner line. We have a possible walk the line set up here. We've come up at the right angle. We've closed above the Keltner. We've had a Renko reversal bar. If we come up here and close above this upper Keltner line, I'd look for a walk the line setup, okay, up into that 49.50 area. So this is a possible setup coming into the RTH. A test of the center line of the Keltner will take us down to 38, and a test of the range low, and probably a break below to take us down to take out the overnight low and hit that naked gap and test the lower line at 32. Now I wanted to mention, I've been tracking this pattern on gold. I want to point it out again. I'm going to start trading some gold today. This is a long-term descending broadening wedge, and we have been struggling to break above the upper line. This is our third test of the upper line, and this is a pattern that has a high probability of being a major reversal pattern. This is a bottoming pattern. So if we can hold now above the upper trend line, I'm anticipating a much bigger move in gold. And let's take a look at what our immediate targets are in gold. You've got, bring these days into the profile. You still have the microcomposite VPOC still down here at the 42-43 level, although we are just getting above. And if you remember from yesterday, this was our key line in gold above us, was up here at that 65 level. We are now just above it. If we hold above it, the numbers that you want to pay attention to is the value area high at 69. And then you've got that 72 and 74 area again. You've got the 72 area and 74 with the big target above still up at that 82.30. And if we get above this 76 level and break out of balance, well, I think we'll hit this 82.30 on the initial push up, and then find some choppiness as we define and mature the auction here with a push up towards that 1300 as this bottoming pattern plays out. So that's what I'm looking at today. Howard, do you have anything that you want to share with us this morning, or do you just want to call it a morning?
Let's call it morning.
Okay, so this is going to complete our morning homework session. I will post the charts into the go-to or the QL. Just remember that we're going to be, if we open up in this area, in the next 15 minutes, we're going to be opening inside a range but just outside of value, and we got a very tight value area. So if we do hold above this level and get into the value area, I would be looking for a 80% rule to play out and go up and test that value area high, because we're into the upper distribution, and this 50 to 52 area is going to act as a magnet as they search for sellers. They're going to take us back up into that level. But if we can't get it back inside of value, then I think we see some more weakness. I still think we're going to end up just chopping around in this distribution zone between 64 and 23.50 today. I'm not expecting any more weakness than that. But it's going to be choppy in this area, so just like I said yesterday, just be careful. Pick your levels and know where you're wrong quickly, because it will be a lot of back and forth again today, and it was not fun trading yesterday, and I should have just taken the whole day off. Anyway, trade well, trade safe, and we will catch you on the flip side.